For many people, probably including you, the word investing conjures up images of men in suits monitoring the exchange of millions of dollars on a stock ticker. I'm here to tell you that you don't need to be the Wolf of Wall Street to start investing. It's okay if you're just a person who wants to start investing his money. Even if you only have a few dollars to spare, your money will grow with compound interest over time. So in this video, you will learn the key concept you need to know to get started with investing. And hey, if you're getting any value out of this video, then let's help the YouTube algorithm by smashing the like button below. Cheers! Hey, what's up? Gerhard here with Business Vision, bringing you the best tips and tools for building a business with online video. And on this channel, I do a lot of business-related videos as well as original content just like this one. So if you're new here, consider subscribing. And now let's dive right in. Before you get into investing of any kind, you first have to make sure that your overall financial situation is in a position to accommodate the new activity. For example, in the area of employment, make sure that both your job and your income are secure enough that will allow you to begin investing. Likewise, if you have a significant amount of outstanding credit, you may want to pay down some debt before you get started with investing, because you should never invest money that you can't afford to lose. And that's the position you will be in if you have too much debt. It's also helpful to consider your goals and why you want to start with investing. And you can do so by asking the following questions. Is this money for a short-term goal or more like 5 or 6 years away? Are these investment accounts for your retirement, or will anyone else have access to this money? Using these 3 simple questions as your starting point with investing will help you influence how and what you're investing in the future. Otherwise, you will not commit the time and energy it takes to invest if you have no reason to do so. This is the basis of an investment plan, and as you noticed, these questions require no knowledge of the stock market. If you've never invested in the stock market before, it can be an intimidating process, and I totally feel you. But since we live in 2020, you can get a date, a ride, or a pizza just with a swipe of a smartphone screen, and investing is no different. However, if you don't have sufficient knowledge of investing or emotional control, which is also important, you can lose most or even all of your investment capital. That's why learning the basics of how to invest in stocks is so important. So if you still want to get started with investing but don't feel like an expert, continue watching this video. But how do you actually get started? According to the ads we see on YouTube or somewhere else, investing in the stock market can be as simple as opening a brokerage account and choosing a few individual stocks or mutual funds. The whole process can be done online, and there are main services that we're going to cover in this video that can invest in stocks for you for a small fee. But the question is, what is the key resource you need to start investing? I can give you 3 seconds to guess. You're absolutely right, it's money. The key to building wealth is developing good habits, something like regularly putting money away every month. Swap out the barista-made cappuccinos for a coffee made at home, and you could already be saving at least $100 a month. By the way guys, you can learn more about fast ways to save money in one of my last videos right here. So what I mean by this example is that spending money wisely is one of the most important steps you can take to put yourself in the best possible financial situation before you begin investing. And once you have little money to play with, you can start to invest. Step number 2 is to decide on the amount you can invest. In reality, the amount you should invest depends on your investment goal and the time horizon by when you need to reach your goal that you set in the beginning of your investing journey. Many people think that to make money in the stock market, you have to start with big money. Well, that's simply not true. You can start with as little as $100 and add to it while you earn and save more money. Before you even come up with the right amount of money, it's important to select an investment strategy that works for you. Are you a risk-averse, conservative investor, or you're going to be trying to aggressively beat the market? Are you investing $100 with a short-term goal, or are you investing $10,000 and trying to secure wealth for generations to come? Now, before we jump to the next step in your investing journey, I want to remind you why you should start investing today. Numbers don't lie, and the truth of the matter is this: the earlier you start investing, the better off you're likely to be. The longer you keep your money invested, the more time it has to grow. Simple as that. Here's a question for you. Have you ever thought about using your savings to start investing? What is the amount you're comfortable with to use as a first deposit for an investing platform? Let me know below in the comment section. Personally, I would say about 3 months of living expenses, and the rest could be used for investing purposes. To become a good investor, you will need to surround yourself with investment experts and learn all that you can. The idea is to become fluent in investments before you begin investing your real money. Even if you have some investing knowledge, it's great to work with an online broker that offers virtual trading using demo accounts. I guess many of us saw this option. This provides you with valuable opportunity to test out any investing strategies before committing with your own money. Quite a few online brokers offer this service, including Plus 500 and Webull. The more you know before you begin investing, the lower the amount of risk you'll be taking on, and that's a common sense, I think. And when you finally feel comfortable to begin with investing in stocks, make sure you do it gradually. Most likely you wouldn't make a major investment in a product, say a car, without first doing some basic research on the model you want and its closest competitors. The same principle applies to stocks. You shouldn't invest in stocks without knowing something about the other companies in the same industry. How you can do this? Owning stocks is nothing more than owning pieces of various businesses. Businesses that issue stocks are required to produce and publish public documents, and those public reports are the first thing you need to look at when deciding which stocks to buy. Reading an annual report is key to being able to value the company. With a little bit of practice, you can learn how to look at these numbers and see what appears to be going on within the company, and I would suggest focusing on these key areas: revenue, net income, earnings per share, price and earnings ratio, return on equity, and return on assets. There are a variety of accounts and platforms you can use to buy stocks. You can buy stocks yourself via online brokerage, or hire a financial advisor or a robo-advisor to buy them for you. The best method will be the one that aligns best with how much effort and guidance you will invest in the process of managing your own investments. I keep saying the word stock, but in case you don't know what the stock is, it's basically a share of the company. So what does it mean to own a stock in a company? Let me give you a quick example that will clarify it for you. If you own a stock, you become an owner of a very small fraction of that company. Let's take Exxon for example. Exxon has over 4 billion shares of stocks, meaning that they have divided ownership of their company into over 4 billion pieces. Owning a single share would mean that you own less than 1% of Exxon. That is a very tiny fraction, but Exxon is a huge company, so that tiny fraction has some value. Moreover, no one said you can't buy more shares. Now let's get back to the methods you can use to invest in the stock market. If you have basic knowledge of investing, you can open an online brokerage account and buy stocks. This will put you in the driver's seat when it comes to choosing and purchasing stocks. With so many different types of online brokers available, it can be tough to select the one that works best for you. But I would suggest going with the biggest platforms like Interactive Brokers, TradeStation, or TD Ameritrade. Option number 2. If you would prefer more guidance and advice on how to buy stocks and our financial goals, consider hiring a financial advisor. He will help you to specify your goals and then purchase and manage your investments for you. You will still need your own online brokerage account, but you can leave the time-consuming research for others. The last option I would recommend you looking into is to choose robo-advisors. This is a simple and very inexpensive way to invest in the stock market. Most robo-advisors invest your money in different portfolios, and they buy assets and manage your portfolio for you. They are generally less expensive than financial advisors, but you seldom have the benefit of a live human answering your questions or giving you some advice. No matter what method you choose to invest in stocks, you will most likely pay some fees for selling or buying stocks or for account management itself. Don't be shy about asking for a fee schedule or chatting with the customer service of an online brokerage to advise you on the fees you might incur as a customer. Yes. This point is crucial. You need to diversify your portfolio to protect yourself in case of a market crash. Luckily, diversifying is not as complicated as it sounds. You've probably heard of the term diversification before. In finance, diversification refers to the process of assigning capital in a manner that decreases the exposure to risk. It simply means that you shouldn't put all your eggs in one basket. So how can you avoid losing all your efforts and resources? An effortless way to do this is by purchasing ETFs, index funds, or mutual funds. ETFs and mutual funds act as a basket of different stocks, giving you instant diversification. The thing you definitely want to memorize is that properly diversified portfolio should include the following assets: stocks, cash, bonds, ETFs, and mutual funds. When starting out, I encourage diversification, especially if you're just like most people who are looking for an alternative to saving money in the bank while still protecting your capital. Once you've started building up your portfolio of stocks, you will need to establish a schedule to check in on your investments and rebalance them if needed. A review schedule will help make sure that your investment portfolio stays balanced with a mix of stocks that are appropriate for your risk tolerance and investment goals. Market swings can unbalance your asset mix, so regular check-ins will help you make small trades to keep your portfolio in order. There is no need to check in on your investment portfolio daily, so a monthly or a quarterly schedule is a good timing. As you review your portfolio, remember that the goal is to buy low and sell high. Still, investing in stocks is a long-term effort, and you will be experiencing market swings as the economy goes through its usual cycles. I could have made the step number 3 or even step number 1 with the intention that you have some understanding of investing before doing anything at all. Fortunately, ETFs and mutual funds, with the help of index funds, remove that necessity. So you can begin investing immediately, even if you're just a beginner. But if you want to move beyond virtual trading or funds into holding individual stocks, you will need to learn all there is about investing before you do it. While you are accumulating money for investments and piling them into mutual funds and ETFs, you should use this time to educate yourself about the game of investing. Read books, listen to podcasts, read the Wall Street Journal, join investment forums, and regularly visit investment websites. My personal recommendation would be investing.com. It's not a paid advertisement, I just feel that this website might be useful for you. That said, guys, doesn't look so complicated, does it? with this basic knowledge in hand, you can continue your journey by moving on to other forms of investing. Take these steps and you'll have the basic foundation that will help you in getting started with investing in stocks. Just remember that investing is a process, not a destination, so you will need to learn and experiment on a regular basis. And the last thing I'm going to say on this, that investing is a long-term game, so you shouldn't invest money that you might need in the short term, and that includes your emergency fund. Did this video give you some guidance on how you can start with investing? If so, smash the like button below and keep an eye out for more content like this. So thanks for checking out this video, subscribe and ring the bell if you're new here. Until next time, this channel is all about bringing us tips and tools for building a business with online video. Keep crushing it and we'll talk soon.